Hi guys, I hope you all are doing well. My name is Keerti and in this video I'm going to tell you about amalgamation. In this video we will cover that what is amalgamation, what is its legal process, its advantages, disadvantages and its various types. So let's start with what is amalgamation. Amalgamation is defined as the combination of one or more companies into a new entity. It includes two or more companies joined to form a new company. Second, absorption or blending of one by the other. Thereby, amalgamation includes absorption. However, one should remember that amalgamation, as its name suggests, is nothing but the two companies becoming one. On the other hand, absorption is the process in which the one powerful company takes control over the weaker company. Generally, amalgamation is done between two or more companies engaged in the same line of activity or has some synergy in their operations. Again, the companies may also combine for diversification of activities or for expansion of services. Transferor company means the company which is amalgamated into another company, while transferee company means the company into which the transferor company is amalgamated. So basically, amalgamation is the combination of two or more companies into a new entity by combining the assets and liabilities of both entities into one. The transferor company is absorbed into the stronger transferee company, leading to an entity with a stronger customer base and more assets. So, the next thing that we are going to talk about is the legal process of amalgamation. An amalgamation is, in fact, a specific subset within a broader group of business combinations. There are three main types of business combinations. It's important to understand the subtle differences when talking about mergers, acquisitions, and amalgamations. The first one is acquisition, that is, two survivors. The purchasing company acquires more than 50% of the shares of the acquired company and both companies survives. Merger, one survivor. The purchasing companies buy the selling company's assets. The sale of the acquired company's asset leads to the survival of only the purchasing company. The third one is amalgamation. No survivors. This third option creates a new company in which none of the pre existing companies survives. The difference comes down to the surviving companies. In an amalgamation, a new company is created and none of the old companies survive. So this was the legal procedure of amalgamation, and there were three business combinations. The first one is acquisitions, merger, and amalgamation. So the next thing we are going to talk about it how amalgamation is different from a merger. Amalgamation is different from merger because neither of the two companies under reference exist as a legal entity. Through the process of amalgamation, a completely new entity is formed to have combined assets and liabilities of both the companies. As I have told you before, that merger is the one where the purchasing companies buy the selling company's assets. The sale of the acquired company assets lead to the survival of only the purchasing company. Whereas in the amalgamation, no one survives. This option creates a new company in which none of the pre-existing survive. The next thing that I'm going to tell about is types of amalgamation. So the types of amalgamation is amalgamation in the nature of merger and amalgamation in the nature of purchase. So the first one is amalgamation in the nature of merger. In this type of amalgamation, not only is the pooling of assets and liabilities is done, but also the shareholders' interest and the businesses of these companies. In other words, all assets and liabilities of the transferor company become that of the transferee company. In this case, the business of the transferor company is intended to be carried on after the amalgamation. There are no adjustments intended to be made to the book values. The other conditions that need to be fulfilled include the shareholders of the vendor company holding at least 90% face value of equity shares become the shareholders of the vendee company. The second one is amalgamation in the nature of purchase. This method is considered when the conditions for the amalgamation in the nature of merger are not satisfied. Through this method, one company is acquired by another, and thereby the shareholders of the company which is acquired normally do not continue to have proportionate share in the equity of the combined company or the business of the company which is acquired is generally not intended to be continued. So whereas in the nature of merger, the previous activities and the previous equity shareholders has to be continued, whereas in the second nature, that is nature of purchase, it is not necessary to continue the previous business of the company that is going to be transferred. So the next thing that we're going to talk about is why amalgamate. That what are the reasons that we should amalgamate? So the first one is to acquire cash resources, eliminate competition, tax savings, economies of large scale operations, increase shareholders value, to reduce the degree of risk by diversification, managerial effectiveness, and the last one is to achieve growth and gain financially. So these were the main reasons that why one should amalgamate. So obviously the company who wants to amalgamate are the one that is having less cash resources and is lacking behind. So the best benefit of amalgamation is to acquire resources, and they can also eliminate their competition. They can save their taxes, and their economies of large scale operation is also one of the benefit of amalgamation. So the next thing that we are going to talk about is procedure for amalgamation. Earlier we talked about legal process of amalgamation, and now we are going to talk about procedure for amalgamation. So the first one is the terms of amalgamation are finalized by the board of directors of the amalgamating companies. Second, a scheme of amalgamation is prepared and submitted for approval to the respective high court. Third, approval of the shareholders of the constituent companies is obtained, followed by approval of SEBI. Fourth, a new company is formed and shares are issued to the shareholders of the transferor company. The fifth one is the transferor company is then liquidated and all the assets and liabilities are taken over by the transferee company. So these were the five steps, five procedures for amalgamation. The first one is that the term of amalgamation has to be finalized by the board of directors, and then the scheme has to be prepared and presented to the high court for the approval. Then the approval of shareholders of that company has to be obtained, followed by the approval of SEBI, and then this new company is formed and shares are issued to the shareholders of the transferor company, and then the transferor company is liquidated and all assets and liabilities are taken over by the transferee company. The next thing that we are going to talk about is accounting of amalgamation. So there are two methods through which accounting of amalgamation can be done. The first one is pooling of interest method. Through this accounting method, the assets, liabilities, and reserves of the transferor company are recorded by the transferee company at their existing carry amounts. The second one is purchase method. In this method, the transferor company accounts for the amalgamation either by incorporating the assets and liabilities at their existing carrying amounts or by allocating the consideration to individual assets and liabilities of the transferor company on the basis of their face values at the date of amalgamation. So the basic difference between the pooling of interest method and the purchase method is that in the first method they calculate the assets and liabilities at their existing carry amounts only. But in the later one, that is purchase method, they can either calculate at their existing carrying amounts or on the basis of their face fair values at the date of amalgamation. Now, the next thing we are going to talk about is that advantages of amalgamation. So there are various advantages of amalgamation. There are various pros. So the amalgamation is the way to acquire cash resources, eliminate competition, save on taxes, or influence the economies of large scale operations. Amalgamation may also increase shareholder value, reduce risk by diversification, improve managerial effectiveness, and help achieve company growth and financial gain. And now we're going to talk about the disadvantages of amalgamation. So, on the other hand, if too much competition is cut out, amalgamation may lead to a monopoly, which can be troublesome for consumers and the marketplace. It may also lead to the reduction of the new company's workforce, as some jobs are duplicated and therefore make some employees obsolete. It also increases debt. By merging the two companies together, the new entity assumes the liabilities of both. So, basically, the advantages and disadvantages of amalgamation include that in advantages, the competition between the companies get eliminated, are in research and development facilities are increased, operation cost can be reduced, stability in the price of the goods is maintained. Whereas in disadvantages, amalgamation may lead to elimination of healthy competition. It leads to reduction of employees. There could be additional debt to pay. The goodwill and identity of the old company is lost. So now we are going to talk about the examples of amalgamation. So on the recent amalgamation announced on the corporate front is of PVI Limited Multiplex. Operator PVI Limited has approved an amalgamation scheme between Bijli Holdings Private Limited and itself to simplify PVI shareholding structure. As per the management, the purpose of amalgamation is simplify the shareholding structure of PBR and reduction of shareholding tiers. It also envisages demonstrating Bijli Holdings director engagement with PBR. After the amalgamation, individual promoters will directly hold shares in PVR, and there will be no change in the total promoter shareholding of PVR. Whereas this was the recent example of amalgamation, there are various other examples as well, like Maruti Motors operating in India and Suzuki based in Japan amalgamated to form a new company called Maruti Suzuki India Limited. Second one is Gujarat Gas Limited (GGL) is an amalgamation of Gujarat Gas Company Limited and GSP Gas. Third, the Satyam Computers and Tech Mahindra Limited. The fourth one is Tata Sons and the AIA Group of Hong Kong eliminated to form Tata AIG Life Insurance. So these were some examples of amalgamations. So for this video, we concluded that amalgamation is one of the tools that can help companies avoid competition among them and add to the market offerings. It is for the mutual advantage of the acquirer and acquired companies. It serves as an appropriate method of corporate restructuring to bring about a change for the better and make business environment competitive. So this was all in the video. We learned that what is amalgamation, what is legal procedure, what is its process, how we can calculate amalgamation in accounting, and what are its types and various its pros and cons of amalgamation. I hope that this has given you much knowledge about amalgamation. Thank you. I have a nice day.